and we continue our conversations with companies that reported results. Century Plyboards is one of them, a 13% revenue growth. Margins also contracted from last year. Its profitability was also under pressure. To discuss more on this, we're being joined by Keshav Bhajanka, the Executive Director at Century Plyboards. Keshav, good morning. Thank you for joining in. If you could help us more with regards to the internals of the quarter with the plywoods business, the laminates business, the MDF business. How have all of them fared? How have realizations been? And what is the road ahead for these businesses this year?
Sure. Good morning. Thank you so much for having me on the show. I think that in an overall muted demand environment, we have done reasonably well. On the growth part, I think we have done better than what most people had expected, considering building material as a category is under tremendous pressure. If you look segment-wise, in plywood, we have had close to a 10% growth, which was as per guidance given by us for the quarter. For the year, growth has been even higher. If you look at the laminate segment, we are finally back to growth, even though growth has been negligible on a console level. Plywood margins have looked up. We have guided for 12 to 14%, and we have managed to overachieve that for the quarter. And for the year, we are well within the range that we had defined. Laminates margins are off, and we have invested substantially over the course of the last 2 years towards growth, but that growth has not come. Hopefully, in the current year, we are looking at a 20% plus growth. With that, there'll be recovery in margins to high single digits for the current year. MDF segment has performed reasonably well, given the overcapacity situation in the market. Standalone basis, we are close to 20% EBITDA margins. Console basis, we are close to 13.5% EBITDA margins. Particle board segment continues to suffer because of overcapacity in the market. And I think till we commission our new plant, which is likely to get commissioned by the end of this current quarter or early in the next quarter, we will face headwinds in the particle board segment. However, steady state margins in the new plant should be close to 15%. With capacity utilization ramping up towards the second half of the year, in particle board, we should be back at high single digit margins in H2. Overall, I think from a growth perspective, we are quite well placed, but the margin pressure remains.
Okay, all right. Margin pressure remains. It's a cautious outlook, Keshav, I would say, for FY26. Before we get to specific numbers for FY26, I just wanted you to just elaborate a little bit on the muted demand scenario that you started this conversation with. Tell us a little more about it. What is this muted demand? Which segments are you seeing it from? What is it as compared to last year? And what are you projecting?
Sure. I think, for the building material sector overall, the new launches that were supposed to hit the market post-COVID, and after COVID, there was a lot of, I would say, perhaps revenge buying, where all the unsold inventory was sold off in terms of houses that were available. The new supply, I think, is yet to hit the market, and you will see that as a reflection across most building material companies. So I think that as this supply starts hitting the market, perhaps towards the middle or the end of this year, we're going to see a revival in demand. Currently, there is a muted scenario. I think the high interest rates, which lead to higher EMIs, have also played into the same theme. But hopefully, by second half of this year, we will see a buoyancy in terms of building material demand overall. Category-wise, I think all our segments other than laminates have done well in terms of growth. Particle board, of course, the new investment will come on stream only towards the end of this quarter or the beginning of next quarter, and that will propel growth. But other than that, plywood and MDF have done reasonably well. And I think for the current year, our overall growth guidance of 15% on a console basis will be met.
What does that do to margins, Keshav? You mentioned that the demand outlook is pretty subdued. But in light of all of this, where do you see margins going in for FY26? You've managed to close the fourth quarter at 11.2%. Do you stay above double digits? Do you improve from this figure and go to, say, mid-teens? Where do you see margins this year?
I think we should see a definite uptick in margins without fail. Guidance or our objective will always be to work at 15% plus console. And I think by H2, we will reach that. Like I said, there are a lot of new capacities we have commissioned. For instance, the Badvel plant, which has MDF, which has laminate, which has PVC with close to 1,000 crore capex. So, it takes some time to scale up and to reach capacity utilization. Particle board, again, will be a lag for the current year, given that we are commissioning only in the first half of the year. So I think towards the end of the year, we will definitely be at 15% plus. And going forward, we will be looking at higher margins for sure.
Since you mentioned it will take some time to scale up, when do you reach peak utilization for these new facilities that you have commissioned? And since you the particle board unit as well in Chennai, when do you reach peak utilization, and what are the kind of revenues that you're anticipating from them in FY26?
So as I've already said, MDF will be looking for close to 80% capacity utilization within the current year itself. We will be clocking 20% plus growth. For particle board, we should be at 50% capacity utilization for the new capacity towards H2. But reaching higher capacity utilization will definitely, or 70 to 80% will definitely take next year. Because again, we'll have to create the market, we'll have to ramp up. We are increasing capacity from 250 cubic meters to 800 cubic meter capacity. So that's a massive jump. But we'll definitely have 40% plus growth in the current year in particle board as well. And going forward, next year, we should be at a reasonably high capacity utilization.
Okay, reasonably high would mean what?
Next year, we will be looking at 75% plus for particle board.
And what would all of this do to price and pricing in your particular segments?
I think in terms of pricing, the oversupply scenario in the market is preventing a pass on of the raw material cost increase. However, having said that, we have worked on a lot of cost cutting initiatives. If you look at MDF on a standalone basis, 20% EBITDA margin has been primarily driven by a slight uptick in price, but a substantial saving in cost. And I think when times get difficult, it is when you work on cost, when you work on efficiency. So long term, it is going to be very beneficial. But pricing currently in the market, I don't see substantial increases because we are in an oversupply situation. Maybe towards the second half of the year, we would be in a position where price increases start.
Okay. Just a quick word on your debt figures.
So debt, I think we are at peak debt already. Like I said, after the particle board plant commissioning, we have no substantial capex. We have a new plywood capacity that will cost anywhere between 100 and 150 crores. But we have no major capex plans. And from now, the debt repayment cycle starts. Hopefully, towards the end of FY27, we'll be back to zero long-term debt.
So by the end of FY27, you are expecting to be zero long-term debt, Keshav, right?
Yes.
All right. Okay. And what about your market share? What is it currently? Where do you anticipate that to go to, considering you have a slew of new capacities coming up?
I think market share, we need to see capacity by capacity. We need to look at different segments. So plywood, we are the market leaders and we have definitely gained in market share. As you can see, our growth is double-digit plus, whereas the industry, I think, would have been low single digits at best. Exact market share figures are difficult, but I think in all the segments we are operating in, we are going to rapidly increase our market share. MDF, with the industry growing at single digits, at mid 15-20% at teen digits, we have grown at 40% plus. So again, we have taken market share. Particle board and laminates, yes, we have struggled, but these segments as well, I'm looking at higher market share gains over the course of the current year.
Okay, so just before we let you go, Keshav, let's just summarize what FY26 and FY27 is going to look like. FY26, you are looking for double-digit growth in terms of the revenue, but the margins are probably going to be pressured. FY27 probably is more of a year where things would look better on the P&L and the balance sheet. You're guiding to increased capacity utilization as well as lower debt. Is that how we would read it? FY27 would be a better year than FY26?
I think the way to look at it is that FY26 will definitely be a better year than FY25. FY25 was when the bulk of the new capacities came in, and FY27 definitely will be a much more profitable year with the new capacities having scaled up.
All right, Keshav, thank you so much for sparing time joining us today. Wish you good luck for the rest of the year as well. Management there of CenturyPly boards, hoping that FY26 is a better year than FY25 and FY27 a better year than FY26. The stock, though, still at the lowest point of the day, 2.5% lower on that stock. Take a short break. All things commodities.